Hi everyone. Today I wanted to do a quick video discussing how to read market structure and pair it with market net flow to determine how to take only the best trades. The goal is to keep it as simple as possible in this video, so for this demonstration I'll only be using price action and volume on the QQQ chart for June 5th, 2022. If you are someone who uses many different trading indicators, learning how to read raw price action and volume first with the help of some market awareness tools such as market net flow or VIX and ADD can improve your trading skills tenfold. Only once you've mastered the basics of market structure, price action, and volume would I recommend adding in other indicators to see if they offer additional value. Before we get started, if you'd like to get a 10% discount for TradingView, don't forget to use my referral link in the description. You'll also find referral links for TradingView and Top Step funded trader programs that will give us both discounts. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. So with that being said, let's get right into the chart. And as you can see here, as mentioned, I have QQQ for today, which is June 5th, 2022. And I want to also demonstrate how you don't have to go crazy marking a ton of levels and everything. I've done several videos on how to find good levels and whatnot, but the reality is you don't actually need them if you know how to read market structure properly. So what I want to demonstrate here is how the only level I marked here was this pre-market high, and that's because if we break past here, I want to look for a potential gap fill. Now, just because we break past here doesn't mean I'm going to assume gap fill, but it's just something I want to keep in mind on my chart. You can also mark other pre-market levels if you want, but we're just going to leave it at this just to show the power of this technique that I'm about to demonstrate. So let's go ahead and play the chart here, and what you'll notice initially is we get this big drop right here. So let me just pause this. And you'll see that we rejected this pre-market level and then we fell. Now, if you're a very aggressive trader, which I personally am not, I wouldn't trade this unless I had some really strong indications of where we were going. Now, today is the day before an FOMC minutes meeting, so that's in the back of my mind. So I wanted to be extra cautious today. So I personally would not have taken this trade, but it is something you could have done as long as you looked at it as a quick scalp. But despite that, oh, and I should mention too, I'm on the 3-minute chart. At market open, you can also use the 1-minute chart if you prefer to get really granular details, but for this demonstration, I'm using the 3-minute, and I would personally, even if I were to start with the 1-minute, I would switch back to the 3-minute once we got past around 11 a.m. just to make it easier to visualize everything. So anyway, what happens here is we pull down, and then I'm going to mark this level right here. And the reason for that is because, and let me actually scroll over a little bit here. This is our first low. So we get down here, we stop, and we start showing wicks, and we're having trouble moving lower. So where I'm going to mark this level is where we get the most touches with these wicks. So the best spot for this level would be right around here. And then you can see we start moving higher, and then we start getting wicks again. So let's play the chart a little bit and see where this takes us. And so, okay, so we move lower here. Now, in reality, it's not going to be going this fast. Let me just slow it down a tiny bit. So this is actually going to be our first high. So now we have our first low of the day, and we have our first high of the day, and we've derived 2 levels from it. At this point, we have no idea where we're going. We don't know if we're going to make a higher low or a higher high. We don't have any indication of trend direction. So before taking any trade, we want to figure out where our next pivot point is going to be to help determine trend direction. So as we let this play out a little bit, you can see here we start actually making a lower low, or excuse me, a higher low. And so this would indicate that, okay, we're actually in an uptrend. Now, I want to point out something that can actually be confusing. In this case, if you were using market net flow, you could see that the day opened up looking bearish. And actually, if you're looking at the sectors and everything today, there was extra confirmation that it was looking very bearish, which could easily throw off a lot of people. Now, personally, all these other tools from market awareness are supplemental. They're supplemental information. What really comes down to what I go off of is what the chart is showing me. And if all these other market indications that I use to tell me what's going on are conflicting with what the chart is showing me, then I just wait, because we have to remember at this point it's only 10 o'clock. We still have a full trading day ahead of us. So there's no reason to rush into a trade, especially when you're seeing wicks this long with this kind of volume. It just kind of indicates choppiness, that there's not a clear direction pick. So it looks like bearishness is going to be favored. The chart is telling us different if you're looking at QQQ, which means that some big tech names were pushing, and today tickers like Amazon were responsible for that. Amazon, Nvidia, Roblox was another big one. But we can see here that market net flow is showing bearishness, but it isn't super widespread. Like you can see here, what I mean by that is later in the day, as it gets more widespread, you can see that the trend starts fully forming. But in this case, it's still early. So while we did make a higher low, so now we do have a trend direction, we still haven't broken out of this range yet. And really what we want to see is a break out of the bottom or a break out of the top, and then ideally a retest to make our first play. So let's see where this takes us as we continue to play. You can see big candles with big wicks forming, which again is just kind of saying stay out. And right here is where we get our first notable move. Now, if we give this a second to play out, you can see not only do we get this notable move, but now we're fighting to stay above this level. And it is totally okay to adjust levels as the day goes on, especially if you're drawing them with limited information. Like in this case, this level is drawn with this wick, and we can see here as these candles are forming, and as these wicks are forming, that this level is probably a bit better down here. And the reason I say that is because we have it contact this wick, we have it contact this wick, and we have it contact all of these wicks. So that's, I'm going to adjust the level here. And again, we still don't have a ton of confirmation, but if you were going to play this chart, this would actually be a good place to take a limit order. Now, if we look at the time, it's 10:20. So let's look at 10:20 here, and you can see that we're still pretty spread apart. It's not as bad as it was initially, so we are coming in a little bit closer. So if you're purely going off market structure, candle formations, and levels, which is you know, the chart is the truth. The chart is the true leading indicator. Then at this point you could take a limit order here, a call, and get in calls with the target being the top of this gap, depending on if we start to wick out when we reach that target. So let's say we did that and we got in limit orders around here, and there would be some scary candles here forming, but then as these candles play out, we start to push higher, and then boom, we get this big impulsive move higher, and this actually completes our gap fill on QQQ, right? So now we filled a gap, and chances are if you went to exit your position, you would not have been able to get out here quick enough because of how big this move was. So at that point you can let it ride, but you need to also be careful, because as soon as we start coming down, especially if you look at the day prior, you can see that we're probably going to start topping out. So as we let this play forward, and I should actually pause one more time to explain something here. Okay, yep, so we come down, we give back pretty much that whole move, but as you can see, now we're starting to get to this point where calls and puts are fighting each other. So we're starting to flip, especially with that big move we just saw. We're starting to flip from bearish to bullish. So, and on top of that, now we're in a good place, because now we've made a higher low, a higher high, a higher low, a higher high, and now we want to look for a higher low, or at the very least, we want to see this level hold. So let's let this play out. I would not be trading against trend personally. Some people do. That's perfectly fine. My style of trading is a bit more conservative. I only want to take the highest probability moves personally. And as you can see, now if you had taken puts here at any point here, yes, you would have been profitable. Me personally, market structure is still showing up. Market net flow is now confirming that market structure. So I am holding on to see what happens. And here I'm really looking for indications that this level is going to hold. So as we play this forward, you can see we start to get that indication as these candles form and try to go lower, and they try to go against the current market structure, they immediately are getting pushed back up, right? So this is a bullish indication and is with trend. So again, this would be a great area to limit order some calls. And like, once again, our stop loss, if you were to get in calls here, I would personally put them right under this low. I would get out if we broke past this lower wick, or and excuse me, and then my profit target again would be this level above us. So as we let this play out, let's say that we re-entered calls here, and all of a sudden you'll see that we start pushing higher. We get a little pivot, and I want to show something about this pivot here. Let me let it play a little bit more just to show you that pivot that we just had. When I see us starting to push higher, and then I see us come back, and we can see that this pivot was on lower volume, that's a great indication that I'm in the right play. That's a great indication to stay in this until my profit target, which really you should always get in the practice of doing anyway, but it's extra confirmation that I made the right choice. Now, if we look here, another confirmation that we made the right choice is that calls are still above puts, so the market is still as favoring bullishness. And also, if you were to look at sectors and VIX and ADD during this time, those would also confirm it. But again, I'm trying to keep this video as simple as possible. And actually, believe it or not, you can trade with just the information I'm showing you here, with literally just the chart and then some sort of market awareness tool like market net flow is all you need to trade. You don't need any fancy indicators. Price action and volume can tell you everything you need to know when you're seeing holds. For instance, when you're seeing these high volume pushes, things like that. So we try to come down here and push us back up on higher volume. Those things can all help you read the candles better without having to memorize all these different patterns or anything. You can just read what the chart's showing you, and as long as you're trading with the current market structure, then you know that you have a higher probability of being right. So this is where it gets interesting, because we hit our profit target, which means you should take off about, me personally, I would take off about 60% of my position, which if you didn't watch my position management video yesterday, I talk about taking it off in increments. And as we push higher here, we can see that we come back to retest this level, and we've had this level on our chart from the start of the day, if you remember from the pre-market. We retest this level, and now at this point, if this breaks, I'm looking to get out of the runners that I have left over. But if it holds, you can a professional trader, a really good trader, would even consider adding more positions here. So let's see how it plays out. We can see we can't break the level, and then boom, we start moving up. And now at this point, if you weren't already sure of it, again, you have, so in this case we made a same low, and then this was a bit of a lower high. However, in this case, this was such a crazy move because it was a gap fill move, and that's something we have to consider. And then what happens is that imbounce causes us to come back down, it causes it to get filled, but we don't make a lower low. So we make the same low, and we go to make another high. Now we're making a higher low and a higher high, and so once again we're right back in an uptrend. And another great place where you could take entries is when you start seeing these wicks. And honestly, as we start moving up, you really should, it really is a good idea to start marking these levels, so of where we're holding. But I just want to show how you can do this with minimal levels, with just reading price action. And so you can see we make our higher high, and market net flow is still showing that we're very bullish. So at this point, we're just trying to pick good spots to get in on trends, and we have another good spot right here. And the reason I say this is because we make a higher high, we come down, we're coming right into this area where we topped out previously. So we can derive from this price action that this indeed is it can act as a level. So when we start seeing these small candle bodies and these wicks holding right at a level that is with trend, this is another time that you can enter the trend if you haven't already, or add positions on if you have runners but you want to try to get more out of it. And at this point, we have no reason to think that we're going to go the other way. If you're trading against it, just know you're doing something very risky. It should be quick scalps. That's fine. You can make money doing it. Me personally, I prefer to go with trend, and I prefer to add positions as the trend continues to move on. So as we let this play out, we can see here that we're trying to push higher. You have another chance here to add a position if you haven't already, and then we really just take off. And of course, if trend's going to continue, we should make a higher high here, which indeed we do. And then once we make another higher high, we'll come back, and we're basically looking for another hold via candle wicks and things like that. We're looking to stay above here. You can actually see that we we actually end up, this would have been a good spot to add some positions as well. So we can, so this is more of like a zone as opposed to just like a straight level, and the reality is that they typically are. And if we were using a tool like volume profile, we could easily identify that zone. But again, this would be an area where you could be confident at adding new positions with a well-defined stop loss and a well-defined, well, at this point, the thing is we don't know how much higher we're going to go. And so that is the caveat if you're adding positions. When you don't, like when you're adding a position here, your profit target can be right here. In this case, if you're adding position, you don't have a profit target, and that's something that you need to be super careful of. We are in a strong 10, and then usually in this case, it's actually probably best to be patient and see how we react here, because markets are fractal. You can count on them coming back down, and sure enough, we come right back down to our level. And look at that, I just put it in between and it worked out perfectly. But right here is where you should get in a position, because now we have a profit target for the bulk of our position, and now we can watch to see if as long as we hold above this level, we're good, and as long as we continue to move higher, we can leave some runners. We'll take off, right, so right here I'd be taking off the bulk of my position, leaving my runners. And at this point, you should essentially be getting the idea of how to initially, and I mean, at this point, it's just a runaway. I mean, there's no reason to be exiting runners at this point. It's getting late in the day, so you know it's probably wise to only cautiously add positions if we see new levels form. Like you can see, we're not even getting back down to these previous highs, so we can sort of derive what I would consider to be weak levels based on these candles here. So I'm just trying to include these two wicks, and if we let this play out, you know, so if we come back to this level and we see an indication of a hold, which we get right here, we get this is actually a very strong hold. The reason I say that is because once again, we try to push below it, we immediately get pushed back up on higher volume. This candle is a bull hammer candle. Despite it being red, it's a downside wick indicating bullish momentum is pushing us higher. And once again, we use market net flow for confirmation. And yeah, we start to see, so this is right around, let's see, this is right around 237. So yeah, I mean, at this point, we start to see calls and stuff, calls selling off and puts increasing. But the reality of what that's telling you is that after we had this massive run up, that people are taking profits, right? They've had calls open all day. A lot of times they've had people, really good traders have had 0 DTEs that have been open since the trend initially formed. And at this point, they're taking profits, which is why you'd see this big drop off. It does not mean reversal. And that's the biggest thing I want to stress, is that do not assume a reversal. If the market structure is in an uptrend and you are trying to play the reversal, ultimately you will lose more money than you make. With one caveat, you can scalp against it, and just know it's dangerous, and it needs to be quick scalps with really precise profit targets defined. But I would not be holding long positions and hoping that it's gonna reverse when you're fighting such a strong trend. So anyway, this is a hopefully somewhat quick video that I want to do on how to read market structure and how to just basically use the most fundamental things to take great trades, just to show you that you don't need a whole ton of lagging indicators or anything special, that you can just use raw price action and volume with a trend, with some levels, and you don't even need to pre-plot a lot of levels. You can just take what the market shows you, because as long as you're not chasing into the unknown, you have levels both above and below you, meaning you have entry points, stop loss targets, and profit targets all in front of you. So if you just use what the chart gives you and then use a tool like market net flow for some extra confirmation, you can be incredibly profitable. And it's not just days like today's. This applies every single day. If you don't believe me, I promise you, do some back testing and you will find the same thing. And also, it's a great way to learn with back testing. So anyway, I hope you guys found this helpful, and as usual, let me know if you have any comments or questions, and I appreciate you watching.